mortgage pain, 150,000 households to tip over $95 billion cliff. Nearly 150,000 households on cheap fixed-rate loans risk falling off a $95 billion refinancing cliff over the next 3 months as the nation hits the peak of the mortgage shock and the Reserve Bank's rate hikes show their full economic power. Now, I'll start with you, Oliver. We've obviously had 12 rate rises in the last year or so, possibly another one next week, although that's looking unlikely. Is this a real concern for mortgage holders out there who are, this rate rise does not seem to be over, this rate rise spikes?
No, it doesn't, does it, Sophie? I mean, there were predictions as well. The Reserve could move twice before Christmas. So for 150,000 households, they are bracing themselves for obviously more pain. And the fact that we are already, as Australians, struggling with the rising costs of absolutely everything from your electricity to your groceries to your council rates to everything else in between, this is going to hit like a major hammer on every single house at the moment. So for those householders who have locked in, fantastic. But as you say, there are so many people coming up who took advantage of those low interest rate environments and fixed during those COVID years. They're going to get a rude shock. So, look, it's going to be a pretty bleak Christmas, you'd imagine, Sophie, for many Australian families. And there's not much that we can do. I mean, yeah, house prices seem to be going up in most capitals around the country, but it's not as though you can sell and move somewhere else because there's so many people and not enough roofs to put over people's heads. This is a really difficult time. And unfortunately, you don't want to spread bad news, but it looks as though we're in for a pretty difficult 6 to 12 months, doesn't it?
It certainly does. Now, Kel, we shouldn't really be surprised that rates were going to rise. They were never going to stay at 2 or 3%. This is a really tough time for families. Do you think this will result in people having to be forced to sell their properties?
Well, look, I think that's the right question, because the question is what comes next. Now, this 150,000 is just the first lot. The end of last year, the RBA estimated there are about 800,000 Australian mortgages which were taken out on these low 2% fixed interest loans. They mature and suddenly they have to go onto the new loans influenced by the rate hike since. So the new loans are likely to be around the 6% mark. Now, you're paying 2% mortgage interest, it goes up to 6%. Big change. So what happens then? I mean, can they negotiate something with their bank? If they can't do that, do they decide that they're going to work 6 jobs? I mean, there are not a lot of options they've got. Do they put, as you said, do they put the house on the market? So suddenly is there a flood of new properties coming on the market? And in fact, we keep talking about, there's this fear of recession, but we've pushed it off. We've defeated recession, it won't come. I don't know that that's certain, because if you get this bigger push on this many households and suddenly these people are in serious trouble, the economy surely must be in serious trouble. That must be the flow on.
Well, time will certainly tell, and we'll see next week if the RBA do move on rates.